Losing track of the big picture and getting tunnel vision on the day-to-day action can and will cause traders to make really poor trading decisions. So I'm going to show you how this applies to gold. So here was the 8-year cycle low that came at the end of 2015. This was the end of the bear market. It started here in 2011. Since that bottom, we've been in a secular bull market. Price has been consistently making higher highs and higher lows. And then this was our last 8-year cycle low right here. And that kicked off the breakout from this huge cup and handle pattern. We got this very strong trending move higher. And we are now in the advancing phase of a new 8-year cycle. Over here, we are in the declining phase of the 8-year cycle. So you would expect that there would be at least one failed yearly cycle during the declining phase, and that's exactly what happened. Here was the yearly cycle low in 2021. Then we had a failed yearly cycle in 22, and by that I mean price dropped below this low for 2021. This pivot made a lower low, and that signaled that we were in the declining phase of the 8-year cycle. But now that changed. We bottomed. We got our 8-year cycle low right here in 22, and now we're back in the advancing phase of a new 8-year cycle. And many traders lose track of that fact. We are still very early in this 8-year cycle. We're only 2 years in. I would not expect a top of an 8-year cycle until at least 4 years go by, and it's probably going to be 6 for this 8-year cycle. And so that would probably mean that we're really probably not going to look for a top until 2028. And so as long as that remains in effect, then any long position you have, and let me repeat that, any long position in the metals is going to be a winning trade. And that means that you don't have to time your entries perfectly. And one of the big mistakes that I see novice retail traders, impatient traders, traders that haven't learned how to control their emotions, even a lot of hedge funds will make this mistake. And this is a perfect example here right now. We're in the declining phase of an intermediate cycle, although I think it probably ended for gold right here on November 14th. But we're churning sideways here. Traders will try to buy into this decline, and if they're a little early, then they panic sell. And if they do that more than once, usually what happens is you get shell-shocked and then you can't pull the trigger anymore. And that is exactly the wrong thing to do, because any long position is going to be a winning trade. So you don't need to stop out over and over in the declining phase of an intermediate cycle because you don't time a perfect entry. You don't need to time a perfect entry. We're in the advancing phase of a new 8-year cycle, so at some point the intermediate decline will end, the fundamentals will resume, take over, and price will come back up and make another higher high. And the same will apply for silver and for miners, although they're more volatile, and neither one of them at this point anyway, has broken the cartel suppression. Gold broke the suppression right back here at 2,000 when the cartel failed to push gold below 2,000. That suppression broke, and I noted it at that time, and I warned that it was going to trigger a short squeeze, and that's exactly what happened, and that's why gold has delivered this very aggressive and violent rally of 800 points. And now it's in a correction, but it looks to me like it's going to be another one of these corrections that is mostly sideways, the same as it was here, and for the most part the same as it was here. Now silver and especially mining stocks will be the last one to break the suppression, and that's why I'm not terribly. I'm bullish on mining stocks, but I'm not ready to trade them really aggressively. I am ready to trade gold aggressively. It has clearly broken the banking cartel suppression. and I'm kind of ready to trade silver aggressively because I think it is in the process of breaking the suppression. It needs to hold above that $30 support zone, and if it does, then the suppression and the manipulation of the silver market's going to collapse just like it collapsed here in gold. But this is a classic mistake that unsophisticated traders that don't, that lose track of the big picture and don't understand how bull markets work. They're preoccupied and tunnel visioned on trying to pick a perfect entry in these intermediate declines, and they're stopping out over and over, and you just don't need to do that in a bull market. Any long entry is going to be a winning trade. You could have entered right up here at the very top of this intermediate cycle, and by the time this bull move is over in 2 to 4 years, gold is going to be piece of cake, 7,000 piece of cake, and probably 10,000, maybe even higher. So you could enter at the very top of this intermediate cycle and get dragged down all the way into this intermediate decline, and it's not going to matter. You've got a winning trade because price is going to, once the intermediate cycle is bottom, price is going to turn and go back up, and it's going to make a higher high. And as you can see, when we get these breakouts, they're making pretty good moves before we get correction. So, from 2100 we went to 2450. From 2450 we went to 2800. I suspect, once we're ready to move higher again, we're probably going to 3200 or higher during this next correction. So it's not terribly important to pick exact bottoms, and it doesn't really make a lot of sense to stop out over and over and then get so shell-shocked that you can't then pull the trigger. The only reason to stop out is if you think you're good enough to pick a lower low and a bottom. But if you entered early the first time, then you probably aren't good enough to pick final bottom, and it's only going to get more volatile as the bull market progresses. So it's going to get harder and harder to pick these bottoms, and so learn the lesson. In a bull market, you don't have to pick exact bottoms to make money in a bull market. All you have to do is get close enough, and anything in this area here is definitely close enough, because we're going to at least 3,000 and probably 3,200 or higher by spring. So any long position that you're taking right now, even if you have to hold through a couple of weeks of drawdown, is going to produce a big winning trade by spring. I'll say it again. You've got about 1, maybe 2 months left to get a monthly subscription to the SMT. After that, I'm going to convert the SMT to yearly subscriptions. It's only going to be available for serious traders that have learned how to control their emotions and have patience, and willing to put in the work to profit from this bull market. It's not going to be easy. You have to be able to buy low, and that doesn't mean you have to get the exact bottom, but you have to have the patience to let the bull market work and then sell your positions at intermediate tops, not into intermediate bottoms. And that's what the retail type traders do emotionally. They sell at intermediate bottoms because they become convinced that there's no way price can turn and go back up, and we've seen it at every intermediate bottom. Down here, the narrative was that gold is crap and it's never going to go back up, and then of course it does. And the same thing here. I don't ever want to trade metals again, and then of course it bottoms and it goes back up, and then here, and of course we're seeing it here. And this is just the kind of mentality that's going to prevent you from profiting from probably one of the biggest bull markets we will see in our lifetime. And I think the potential is especially huge in silver. I think it's in the process of breaking that cartel manipulation. And then once it does, I'm pretty confident we're going to run to at least $45 in 2025, maybe $50 in 2025. And then once we break out above that, I'm on record, $100 silver is going to be a piece of cake. $250 is likely, and $500 silver is definitely possible during the last 8 weeks of a final bubble phase. Silver is just a thin market, and it can go from $100 to $500 literally in the span of 8 to 12 weeks. So I think there's a lot of potential here, but you've got to be willing to do the work. You've got to be willing to hold through extremely volatile moves, because it's only going to get more volatile. So you got a month, maybe 2 months left to get a monthly subscription to the S&P if you want to do that. After that, I'm only going to, I'm kind of done trying to teach people how to control their emotions and have patience. After that, the S&P will basically just be for serious traders that really want to profit from this coming or the bull move that has already started here and has another 2 to 4 years to run. This is going to be a life-changing move for traders and investors, but it is not going to be easy to hang on through this.